Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a audio check in YouTube and the Bookmap Discord Trader Lab community? Well, good morning, everybody. Thanks for visiting Trader Lab today. Just a heads up, I'm streaming from Costa Rica, and I really don't know the capacity or capability of the current internet that I'm on. So if there are problems, please let me know. I will drop out of Discord if there is a problem, and then stream exclusively in YouTube. If you're in the Bookmap Discord Trader Lab community, and I do have to drop out of Discord, go over to YouTube. The link is already posted in there for you if I have a problem with bandwidth. Well, thanks, everybody. Thanks for visiting Trader Lab. I understand you guys have daylight savings time in the U.S., and of course, just so you know, they don't have it here in Costa Rica. So I will tell you that despite the market being a bit of a challenge, trying to coordinate all these time zone changes and no change, and it was just more pandemonium than usual. Just to add a little spice to the excitement of a liquidating market. So let's see if we can get this going. I have been having data delays, and I'm going to have to maybe adjust my server since I'm still kind of connected to Chicago, and maybe Miami or somewhere in South America might be better. I'm not sure where these servers are with Rhythmic. So let's get going. Actually, I do need to take care of a little bit of business. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And again, thanks for visiting Trader Lab. Let's see what we can do here. I'm going to give you a couple statistics, and remember, we're in a liquidating market. As if you haven't noticed that this is not your typical walk in the park, then you might want to kind of concentrate a little bit. Also, if you do not have a vetted, structured trade plan to operate in this volatility, or you have the ability to make adjustments to rotations and range, then you need a trade plan. That might, if you're having issues or you're hitting loss limits, meet FOMO because you're just gambling. And I always suggest go to the casino, get the cocktails and the ticket to the buffet. Because if you're a gambler, unfortunately, your ability to sustain yourself in this business is substantially minimized. And I want underline substantially. So here's a couple statistics for you. And these are based on 953 days of daily RTH, call it candles or bars, days. So, and statistics have nothing to do with context. We are in a liquidating market in a global upheaval. So I think we all know that. So if we understand that, then what we need to be thinking about is this is just not a walk in the park. This is an event. And when you're in an event, when everybody globally is running for the exit, you have to kind of think about it a bit differently. If you walk in here to trade mechanically, then you do not understand context. Context supersedes everything. It's number one. So in a liquidating market, it might make sense that you don't take longs. You do not trade counter rotations unless you're a highly experienced trader who actually has an edge trading a liquidating market on a counter trend basis. If you're a developing trader, which we all are, the edge might be better trading with the trend. So think about that. You've been taking longs today, then questionable. So here's the statistics. The probability of taking out the previous higher low is 85%. The probability of getting to the ETH volume point of control is 83%. Let me see if I can find out where that is here. It might be covered up. I don't even know where it is. I think it's covered up. Hold on. I don't know where the ETH volume point of control. Do you guys give me the overnight volume point of control? And are we still okay audio and otherwise here? 83% probability to get the overnight volume point of control. ETH low, about 65% probability. Two times the initial bounce, that's the first hour's high or low, 39%. 1.5 times IB low, 36%. Now, here's what's important to know. Those statistics don't mean anything because we're in a liquidating market. You can use them as a gauge, but always, context is number one. So this is the auction. And the idea of the auction is what the market does is it wants to figure out what's too high, what's too low. Well, if you look at what's going on here in the market, I don't know about where too high might be, but I think we can estimate rotations and probabilities. What we cannot do in a liquidating market is determine where is too low. We'll know that in hindsight. But when it comes to trading, it's really about statistical edge. It's not about predicting anything. So if you don't know where your edge is, then you're gambling. And I'm kind of a fan of retail traders actually building out the business of trading and understanding that if they want to gamble, they shouldn't do it here because you're on your way out. So this is the RTH Open. Now I'm going to go into some structured trades, and I'm going to focus today on microstructures, market mechanics, and some structured trades that are available in the Bookmap Discord Trader Lab community. And did I get a ETH volume point of control from did somebody post that? 95.50. So this is the ETH volume point of control. Oh, that's nice. Is that correct? It's 57.15. Okay, that sounds a bit better to me. Okay. Yes, the ETH volume point of control is 57.15. This is the retail price from the last auction. And potentially, remember, underline potentially, it has a 83% probability. Now, liquidating market, who knows? So, if we see RTH open, then the possibility, and by the way, VWAP is not on here at the moment because of daylight savings time. Some of these resets need to be adjusted in Bookmap. It's not a big deal, except you need to know daylight savings time. Some of it, a few things need to be tweaked. So you always have to check. So retail price, market opens lower. Potential is, and think about what this says. It's a language. This is the current retail price. if it becomes too low, the market can come back and check this. Is this still too high? Auction is really a shopping experience. So what is too high? What might be too low? And again, who knows? So let's go take a look here. Now, I'm only going to be talking about short trades because if you're taking longs and you aren't already a profitable trader taking shorts, which is an alignment, then you've got a problem. And I would suggest that's called Hyde, Jekyll and Hyde. So remember, 83% probability. Now, this is the first trade. This is advanced processes, and I'm going to show it to you. This is not necessarily anything you would take. It's just something of interest. Can you guys see Investor RT? Can you see this, guys? Don't forget, I'm IBF. No, there is no IBF unless you're a counter trend trader. If you're not profitable with the trend, I'm just seeing a post. Is that an IBF? If you take it, I'm gonna stalk you, track you down, and we're gonna have a talk. Okay, this is Investor RT. This is my higher time frame software product. You can slice and dice the market. It is an excellent auction market theory or volume profile product. It also exports levels that you see here in IRT, from IRT to Cloud Notes and Bookmap. It's very cool. Saves a lot of labor, and it is really awesome. Now, let me see if I can open this up, actually show you a little bit more of this. It's a little hard. I'm on a laptop, guys, so you got to understand this is not really, it's a little challenging, I guess is the word I want to use. Sorry for taking a little time with this, but here's what's important. 5703.50, that is a higher time frame. Now, we integrate into the higher time frame. This is Friday. And why do we have a tail here? Well, Friday, short covering, right? Okay. So now we close up in here. So right here is pretty important what we do. But this is the micro composite volume point of control. So all the volume up until Friday, it is saying this is the high volume price. Friday's high volume, 1 day, I'm going down in fractal, this is the retail price. So we left it behind. That is a suggestion, perhaps, that this is too high. 57.69.5, which is a higher time frame composite. So I'm going up in time frame here. This is too high. And where's the next level? 57.03.50. Now, when you get to higher time frames, what this is a low volume area is this outside edge of a distribution. And the market tends to rotate in these areas. The high volume node, which is like a retail price where most volume is at 65, 63. And in fact, we were talking about this as a target for Friday. Interesting, isn't it? Now there's a little more and then we'll move on. Next target is down here, not necessarily today and maybe never. That's not the point. Okay? The other thing is ETH low. Hold on a second, guys. I think I'm losing my mind. Are these levels correct, guys? Yeah, probably is. They're not. There's no scale here. Let me just get back. Again, I apologize for this. Laptop. Just kind of difficult to move all this stuff around. Give me a moment. But I want you to see kind of how pieces might fit together. Because, in Trader Lab, It's all about the business. It's not about gambling. And if you've been just like all thinking about the profits and not thinking about your business and sustaining it, then you're not ready to stay in this business. That's how important it is. So if that sounds insensitive, yeah, I'm not sensitive when it comes to things you have control over if you work on it. The market is random. You need to be anchored and consistent. Okay, how are we doing in YouTube? Are we still percolating over there? Are we doing all right in YouTube? And Discord? Repeat, I don't know what you're mentioning there. You make me think that I'm dropping out. So please don't put it in there. Okay, 5703. So what do we have here? We have RTH open. We have a potential target up here. We have a microcomposite high volume node. So this is high volume in a higher time frame. And this is the retail price. So this would be the first target. Now, let's again discuss the trend. Can anybody think the trend is up? Well, if the trend is down, I have no long. I am looking for shorts. So if you're now, let's look at the first short. Now I'm going to show you a short, and this is an aggressive trade. And if you don't have this vetted, then you don't have a trade because you're kind of in the middle of nowhere, you know. But remember, I showed you 5703.50 is and you saw that, right? This is an outside edge of a higher time frame distribution. So this is all auction based. So this is on the price map. I just showed it to you, I hope. And this is right here, this is a structure, a triggering structure. Now, if it's not in your plan, and this is extremely aggressive, the open is a very dangerous place to trade. I always mention in Trader Lab, don't trade this. Just hang out and narrate it. Learn to read the language. Now, the thing about this is there's alignment, but the higher time, as you go up in time frame, there's more slop. And this is the highest time frame. This is all the volume. This represents, this level came from all the volume that is transacted up here since the market's been here. So you might say it's really higher time frame. And the other part of this is like a notch or a low volume area or an outside edge. We fell out of a higher time frame distribution of volume. This is kind of the outside edge of that volume. So if we come up to it, it acts potentially as resistance. Now this little high volume notch sticking out here, right here, we have selling icebergs. I've got my buyers here who are being absorbed. I don't know that. I got buyers here too, right? Higher. Buyers here too. Higher. Now, I'm in an area of a location. Now, this is an advanced process, so this is not specifically anything that you would do, but it's something you would start narrating and thinking about. And I really need to know if things get nasty in the audio. Justin, are we having a problem? Leave the stage. Okay, hold on, guys. I'm going to try this again. Hold on a second, YouTube. I'm trying to restart things over here. I think we're just going to keep this going in YouTube. It's less, I'm going to stay in YouTube, guys. Okay, so all right. Let me know if I'm okay in YouTube, guys. All right. If you're in Discord, well, can't hear me if you're in Discord. So, Dan, let them know that YouTube only at the moment. So this is a potential short here. It is not a structured trade. It is it's not at a location unless you want to lean on this, more advanced. And again, your plan has to reflect being vetted so you know where you're going to interact. If you don't know where you're going to interact, then you don't have you just have nothing to do. So this is called VPOC migration. This is now the new retail price. Let's take a look at what happens here if we have a trade. This is a variable high volume node. I'm going to label it. And if the market comes back here, we may want to check it. And if we do check it, if it's too high, it could set up a structured short. Thank you, Dan. ETH low. So this can be a short. However, the volatility, you can kind of see, you probably cannot execute here unless you're very skilled. Again, for developing traders, there's no trade here. This is a business of edge. Now, variable high volume node. This might be a structured trade. Let's see what it does. Now you're in high volatility. This is too high. That's why, and this yellow line represents the retail price. If this price, and it's based on volume, if this price is too high and now the current retail price is here, if we come back and check it, if it is still too high, it might give us a short back to here, and then whatever happens from there. Let's see what happens. And these are not trade recommendations. Everything is, helmet time. And the trend is down. Let's see. So this is for me, or I should say, for developing traders in Trader Lab who are actually disciplined and have a trade plan, this is your first trade. And by developing, it's where's your edge? In my opinion, this is a business of edge. And if you don't have a trade, your job is to hang out. It's like buses. They will show up. And then you wait for your trade. That's our business. And if you think it's just clicking the mouse and chasing the market around, that is not a way to stay in the business. Days like this take the amateurs out of the business. If you want to be in the business of trading, you've really got to think about this differently. So, too high, short, too here. Remember, this is what? Too high, retail. What does the market do? I'm not paying that. Well, let's go back to the retail price. Is this too low? Short to there. Actually, the short is in here. Let's look at it a little closer. So there's our level, okay? This is called structured trading, and it's available to all of you in the Bookmap Discord Trader Lab community. This is what I'm stalking. Now, right here, I have my buyers. I've got selling icebergs. I got buy stops. We're having a great time. Buyers are here. Now, I'm going to show you microstructure and order flow. I'm going to try to draw on here. Let's look at the trigger. Location, location. Now, right here, when the sellers get below these buyers, right there, that sets up a trigger. And we are below this high volume. Let me give you a sense of what trading in fractals is. In the developing daily time frame, that is high volume there. And that's where the developing volume point of control was, and it shifted lower. This is saying the retail price with the highest volume is sitting over here. Previously, this yellow line was sitting up here, and now we move lower. So the high volume represents what buyers and sellers are willing to pay. It's like when you go shopping in the store, high volume is retail price. So it was the retail price, and now we rejected it. And this is the new retail price. Well, if the buyers and sellers are no longer willing to pay this price, and we check it, think of this like going to your favorite store and shopping. Well, let me see if I can get a little line on here for you. Let me see if I can draw a rectangle on here, which is a little cumbersome, but let's see if we can do that. So where does this break out? You see those lower, well, try this again. So right in here, this is where the sellers, I think I grabbed the right spot. Let me just make sure. Yeah, this is where the sellers took control. If you were to get short, you could sell it right against here, and your stop needs to be 3 ticks over this. You would not be stopped out if I see this correctly. And what you're trying to do, here, let's get this in here, is get down here. In this line, so you know where this is the high volume, this is your outside edge, and basically you would be shorting it either there or there. Let's assume it's there. Okay, 1 tick below. I think that's 94 3/4. I can't quite tell. And it's about a 3-point risk. Scale. And you get taken out. Okay? So you would get scaled here, you'd get taken out, and now we come above. High volatility, let's just keep watching. Now, this has about an 83% probability, but let's see, MCHVN. This is our low volume node. The volatility is taking this outside of some structure. So this is not, again, this is a very difficult environment, I think, for most traders to operate in, because you're going to be chasing the market around. And the key to this is not trading if it doesn't set up based on your plan. That is really the business we're in here. This, I have nothing here. So I have nothing to do here. Let's see what else you got. Now this out here is where this is a trigger out here, but this range would take it outside, a 5-6 point stop. But let me draw a little structure around here for you. Now, nobody knows when you're doing this, it could keep going. But right in here, down here, this and this is the outside edge of this consolidation. So it's out here, but we had our buyers test higher, test higher. Now, less juice. Buyers are here. Sellers are up here. Trigger, and it's not a short because I won't trade this depending on my trade plan and risk management. The bottom where it changed is here. The sellers got below the buyers, which were there. How do I know there were buyers there? Because the buyers are here, the buyers are here, there they are, and then the sellers were absorbed there and there. That's why you see a red bubble, and then we rotate up. Now we break down. Okay, mean reversion. Now, where did the sellers take over? It was here. So if you put a line on here, just for the breakout, you see where it comes, right? So this is now resistance. Again, you've got to have an understanding of this or you don't have a trade. And this is not a regular day. This is not another walk in the park. this is mean reversion. And what this is doing is too high, too low, and this is a rotational trade. And if you can't trade this, I have to say you don't trade it. Let's see how we're doing. Guys, if you have questions, please post them. If let's see how we're doing here. The first hour's low has over 90% probability of getting taken out. Remember, 56.64 is a key level, not to mention yesterday's low, but that was kind of a given. And we're looking for it to head lower. So 68, first hour's low would be a target, and then we have structured trades and Trader Lab, which I'll talk about. By the way, as far as rollover goes, it's going to be next week. I accidentally mentioned that it would be this week, so rollover to the June contract is effective for next Monday. And you have to adjust every level and everything you do based on the spread between the June and the March contract. This is VPOC migration. That says everything above us might be too high. So let's see. 920. The way this tends to work is this is the retail price, and there's a few possibilities. When this shifts down, we can either just keep going. I know you want more certainty. Unfortunately, wrong business for that. This is a sell sweep. This suggests, actually, let me show you a couple of sweeps here. This is a great tool in Bookmap. Remember, Bookmap's an order flow tool. It's not a red light, green light process. This is a buying iceberg. These sellers were absorbed. 587 sell stops. Thanks for playing. 603 buying icebergs there, 200 here. So you got 800 and change. They're taking the other side of this. You'll notice the icebergs are buying. Now, the fact the icebergs buy doesn't mean you should buy. They're in a different business than we are. But here's a buy sweep. So the buy sweep suggests rotation down, potentially. The sell sweep, and these sellers were absorbed by the icebergs. The sell sweep suggests rotation up. Let's just watch the behavior, okay? So not that anything is predictive, but if I know this can rotate down, would I want to get long or would I want to only be taking shorts? And if I see the sweep and I come across here, then it suggests the possibility to come out here to where the sellers took over. I'm just going to put a line down here so you can see it, because you can track this, because the auction is a language of the market. So right here, you've got your selling icebergs, you got buy stops, who knows. There's a trigger, and this is where it broke out. That's where the breakout is. So subject to your plan, again, it's either a short or it's nothing until potentially here. Let's watch. This is a Trader Lab structured short, and you're going to take this out. So the short would be here against this. This is your location. There's your absorption here. There's another trigger. Your micro high volume structure is there. So you'd be looking against here. You'd be looking here. You'd be looking here. And you're going for that. Okay? And what this is, so you know what it is, what we're doing is here, we're trading outside in. And the idea of the outside is we're in rotations. So if you're trading the trend, which I hope you are, you're going to be looking to get short. And at 9:30, we have over a 90% probability, past performance not indicative of future results, of getting here. Now, there's more. Yesterday's low is important, as is continuation. Is everybody tracking? How you guys doing? Is there a problem with the YouTube needing to be spliced? I'm not sure I'm seeing posts. I just want to be sure what's up. Is this YouTube working okay, guys? Sorry about this. I'm in Costa Rica, so they don't know about this streaming concept here, at least where I am. 5680 was too high. This is called VPOC migration. This also is a possible short continuation trade. It also, and these are advanced concepts, so too high, IB stat, and then we have another short setting up. Remember, the trend is down. You taking, and what are we leaning against? Yesterday's low and this for continuation shorts. Let's just see what happens. And we all take stops, so let's not get too overburdened with that. This sets up the IB continuation trade right here. So what do we have? We have too high. We have microstructure right here in this. Sellers were absorbed. Now, right here, you know, it's like, what's going on? You could be selling this, you could be selling this, or you could be selling that right there. There's a sweep. And when I see a buy sweep, often, not always, often what happens is, and let's put some pieces. Yesterday's low, so we're outside of range. We're testing the range. We see a sweep. We know too high. And this is a sweep. And this says south of the border. We'll catch you later. I'll send you a postcard. And again, the sweep, the sellers, the continuation. All these are shorts in TraderLab. You haven't noticed the long anywhere, have you? And where do I come back? To the sweep. And to what? The bottom of this structure, this outside edge. This is, I'm having many different components here, and today's not a day where you're going to learn this. This is the day you come to work and you're ready and you know what you're going to do and you have a vetted trade plan and you look at the volatility and you say, well, what is the range that is qualified for my risk parameters? And do I need to increase my risk because of the rotations, or do I not have trades until the rotations compress and then it fits my risk parameter? I really want to make a point of this, because if you've lost your mind in this, you know, because of FOMO and all that, you got work to do. You're going to stay in the business or have an opportunity to be in this business. You got to change what you're doing. This is a short in the TraderLab structured trade. How we do it at TraderLab? You guys been taking these trades? This is what you work towards. Days like today, it's all about preparation. I'm still live on the same link. Dan, did I drop out of YouTube here? I really didn't get any. I have no idea if I did, of course. So this is a short. This is a target, 1.5, the IB low. Let me see if I have a statistic for you guys. Well, hold on. It's a low probability, but it doesn't matter. Remember, context is number one. This would be the next target. It's the probabilities don't lean this far down, but the probabilities are not sensitive to the global financial instability that's been created by policy in the U.S., as you guys are familiar with. Next target is down here, wherever this is. So let's go take a look. There's a sweep, and this is the retail price. So the possibility is to continue being rotational and to continue lower. This is a target. Now we got to see what we get out of this. All right, thanks guys on the YouTube report. So stops are going to be here at the IB, and the outside edge is here. When I talk about outside edge, let's talk about auction for a moment. Hopefully the stream will be a little bit better tomorrow. But I suspect I might not be able to stream in Discord because of the internet here. It's like a string in a tin can. This is an outside edge. This is called the low volume node. And what you got going on here is the market auctions. It rotates on volume. This is the outside edge up here. Well, if this retail price is too high, we leave it and we start a new auction. Too high, too low, and high volume is here. Think of this like with the way an auction might work is if the price gets too high, the buyers won't pay it. And that's where the volume drops off. And over here, if we come outside and we come back here, the market is really checking this high volume, retail. And if it's too high and we fall away from it, we start the process elsewhere. And this happens in all time frames or fractals. So this is the retail price over here. And right now, the volume point of control, which currently is here, is saying this is the highest volume. So if I come out here and it's too high, I can do what? I can do this. Let's see what it does. VPOC migration. Believe it or not, guys, I'm in Costa Rica and I've got 3 monitors working here. Portables, little ones, like the kind 15, whatever they are, 15 and a quarter, 15 and a half. My eyeballs are falling out of my head. I cannot trade this volatility when I have internet like this, so I've not been able yet to put trades on in this. It's just not something I need to do. There's a sweep, VPOC migration. This is saying at the moment, potentially too high. This is VPOC, and there's my sweep, buy sweep. This sets up potentially a short, not a recommendation, going for this, 1.5. I don't know if we got here yet. I can't tell. But it is a potential short. But we can also come up here. Remember, low volume is here. So this kind of a thing. Okay, let's see what it does. Where's resistance? Here, here, mid, and this. Now, if you took this, you would take a stop. If you looked out here, you don't have anything. This is resistance, and there's the mid. In this situation, the mid with this behind it is a reasonable opportunity to short. If it's too volatile and too fast, again, nothing to do. Now, here is a trigger. Let's just take a quick look. So you've got this too high, and in the microstructure, this is too high. Now, again, no way to know it's too high until you see the change in behavior. If you took this, suggested a downside rotation. This right here suggested a short. This would be your stop. Thanks for playing. Broker sends you a gift basket. Mid, going to the moon, because we don't know where the outside edge is. Change in behavior. Selling icebergs, buy stops. Retail traders keep their stops over the mid. They all do the same thing. You know how I feel about the mid. I want the stops out before I join. Here's absorption. Here's the stops. Here's the stops. Here's the trigger. Here's the micro structure. It's right there. Resistance, trigger, right here, right there. I'm going to put another little line in here and I know there's going to be a lot of lines. This is where the short is. 1 tick under here, 3 ticks over here. Not a recommendation. You got to vet that for yourself. I'm giving you some ideas. So how you might structure triggers as you're developing, and you have to vet these for yourself. Target is here, and then wherever, that's part of the thrill. And then it's trade management. Okay, guys? So we've had some good shorts, I think. Where are we here? Let me see the time. Oh, I think I'm getting current, right? Oh, so this is a short. This would be the last short that I would entertain. You get risk neutral, and then you're either managing your trade or you're out. The idea of the trade is not to try to stay in and think where the market's going to go or how it's going to go. If POTUS does a news thing and says something, it's like any other input. It can be very disruptive, and it can create volatility. So risk management is always key. Personally, I have no reason to think we're not going lower, but what I think has nothing to do with how I trade. My thinking and trading are not necessarily in alignment, because many of us think, well, it can't go lower. I've learned over many years that it can go lower, and it can keep going, and it can just keep going. So what you think has nothing to do with our business. It is not about what you think, because now you're just guessing. And, I suggest you, all those other retail traders out there who are thinking it can't go any lower and want to buy it because it's going to go higher at some point, they go out of the business, because that's typical behavior. Trader Lab, the idea is not to do what they do. We all take stops. I mean, nobody escapes overhead and cost of production. How we doing, guys? How we doing in YouTube? Please give a like. Hope you like this. There's no magic 8-ball here. And here's the other thing about today. I'm here to kind of share with you the business of trading, and to help you develop trade plans that have a statistical edge, taking a long view of being in the business, sustainability. A day like today, you may actually, while the range may be high, you don't need a lot of trades. You need trades to give you an edge, and then a process that's already been built out, so you're just doing your thing. You also need to know, based on a vetted, structured trade plan, if trades come along that don't have an edge or are outside the specific parameters you have defined as far as risk that fits your account size or your skill set, your job's not to trade. And if you are, that's FOMO, gambling, and I don't want to see you guys not stay in the business, but you've got to manage yourself. You need to keep notes. You need to log what you do and what your emotional state is. I believe if you come to Trader Lab, anybody can learn how to trade. That's a personal belief. Now, whether you will even do the work, that's a decision you make, because yes, there's work. The other thing is, how do you manage these impulses? And they're so strong. Have you ever thought about that maybe it's not your intention, that your intention cannot override primal wiring? And if you're subject to this primal wiring, then how do you become familiar with it, and how do you manage it? Well, that's another element, and maybe the biggest obstacle to staying in the business. And it's not willpower. I mean, I don't know about you, but I certainly tried it. And how we doing there again in YouTube? We still good? You guys, please give a like. Hope you're getting something from this. Give a thumb. Thumb is good. Thumb up. And appreciate you guys visiting Trader Lab while I'm in Costa Rica. I'm not so sure I'm going to be able to stream in Discord, though I do post in Discord. Trying to stream might be a little problematic. So you might be, if there's problems in Discord in the Trader Lab, just go over to YouTube. This is a sweep. So let's look at the sweeps. This suggests here a potential counter rotation. Now the trend is down. Here we sweep into liquidity. We want to see the behavior here. Remember, we're in a liquidating market. I couldn't take a long, even if you said, Tom, I'll write you a blank check. Enjoy yourself. I'm going to go, that's okay. Save your dollars. Go to dinner. Let's watch the behavior in here, see what it does. I have nothing to do right now. The only way I can operate in this now is if I get counter rotations or short squeezes. And when you're in a long liquidating market, you might not get a lot of that. Because the only buyers I suspect at the moment are shorts getting squeezed. So if you're in a downtrend, how do you trade a downtrend? You wait for, if it's in your plan, counter rotations, and then you need structure. Well, there's not much going on here at the moment. Let's see what happens right here. So what I have found, when you have this kind of range, the dollars are made in the rotations, not in this. So this might be a trade management opportunity here. If in other words, you get this, you get taken out. But when you come back to structure, let's look at microstructure. I'm going to show you just the concept. And this is what I do all day and what many traders in Trader Lab do. This is too high. Reject it. Boom, short, right? Pull back there, short entry. Where were the buyers? Here. You could just be going, there to there. It's up to you. Comes back here, too high, short to there. Comes back here, too high. And you could just be trading rotations. If you move up to a higher time frame, you're just sitting short from here and you leave your stop out here. And then you get risk neutral, and then you put your helmet on, sit in the Barca lounger and wait to see what happens. And then you have a more passive trade management plan. So instead of doing short to there, taken out, short to here, taken out, you could be short, risk neutral, stop out here, Barca lounger, liquidating market, going to who knows. Are you guys following? Please give a like in YouTube. Hope you're getting something from this today. Remember, the idea of the Trader Lab is that when a day like this comes along, you already know what you're going to do. And you already know in your trade plan that you're going to be stoked emotionally. The juices are flowing. Fight and flight, FOMO, all of it is lit up. Think of it like drugs being released in your brain, and you are now drunk. You're under the influence of primal chemicals. Are you aware of this? If you're not, you need to come to Trader Lab because you don't understand what trading does, what it stimulates in the chemicals in your head, and you respond to those chemicals because they're primal. Okay, let's watch. Remember, we're looking for a potential rotation. Now, for me, and this is not trade recommendation, for me, the whole thing is just sell it. Buying it is not on the map. The only buying for me is trade management. So subject to my plan, I'm either short from out here someplace. I mean, look at this, 20-point rotations. You know what those are. If you're in Trader Lab, you'd have the opportunity, if you had a plan, to be getting these or pieces of them. This says rotation here. It only got that far. This says rotation here. It's going further. How do you know the difference? How about this? You don't. Outside edge is sitting here, low volume node. High volume is here, too high, microstructure. Let's just see what it does now. How you guys doing? Hope you're doing okay. Can I get a thumb up in YouTube? I don't see any. That doesn't mean you haven't done it. And if I refresh my YouTube, God knows what will happen here. Just in case you're just joining the stream, this stream will be available to review if you're inclined. Hopefully the quality in YouTube will be there. Let's keep an eye on things. Now, guys, if you've been counter trend trading and trying to buy this, it's up to you. But meanwhile, if you're trying to take longs like in this, you may only be falling over pennies and taking the equivalent risk of taking shorts. Now, I notice, at least for me, I'm more inclined to be on the short side because I'm aligned with the higher time frame and long liquidation. If I join the retreating side, it's like a counterattack. No, thank you. This is like sending the infantry in. Hold that line, and thanks so much. We'll see you later. Micro high volume structure buy sweep suggests counter rotation, not a recommendation. This is micro. I'm going to share the micro structure with you so we can see how it behaves. The outside edge of this little distribution is right there. So we can pop into this, and if we can't get above it, we can continue lower. So this is a sweep suggesting upside rotation, and this is a sweep suggesting potential downside rotation. The range is tight. So where might your better trade be? Out here, and there's shorts. Here's the other thing to think about. When the market gets short, there's buy stops. By the I call them trailers, So the market goes down to go up. The market goes up to go down. So we want to see how far back we can go before we continue, if we do, lower. Not a trade recommendation, it's just maybe. You guys are familiar with maybe. I know you are. Let's watch. So what I like to talk about a lot is you need to anticipate to participate. So if you're sitting short and you see the sweeps, what I do is when I'm subject to my plan, if I'm in a short here and it's going to zero and I start seeing microstructure with sweeps, I'm just on guard for a reversal. That's all. And then subject to my plan, and again, this is individual, right? If I take this volume out, which was the last sell trigger, then I can be out of the trade. Or my stop is way out here somewhere and I'm just in here working on my crochet. So it's a function of your plan. So if you don't have a plan, so you know what you're going to do before it happens, that's the whole point of a trade plan. You can't be making it up here because this is random. So if we're in an environment that's rotationally random, even though the trend is down, we have to know what we're going to do. So in the Trader Lab, the idea is vetting and building out trade plans where you've done the work so you know you have probabilities on your side, statistics, and then following this plan. So it's like you bring your plan to work and you sit down and you go, okay, where's my first trade? What are my statistics? What am I trying to accomplish over here? Well, then you wait. It's like waiting for a bus, but you're not making it up here. If you're making it up as you go, you're just a gambler, and I don't want to disappoint you, but your potential of sustainability is very low. So if you're interested in the business, it's really much more, TraderLab is really about helping you guys understand the business you're actually attempting to be in. And it is not a business of indicators and prediction and confirmation. We don't have that in a random environment. Casinos don't have it in their environment. So we're in the same environment. This is gaming. So if you're going to play, quote, games like casinos do, only play the games that have an edge. Don't make the games up. Casinos aren't making games up, are they? They don't get bored. Here's our microstructure. We're at an outside edge. Now, these are not necessarily trades that are even qualified. They're just rotations. So I don't have anything here. We're looking higher in the food chain to see how far out we can come. Let's see what we got here. Okay, nothing going on here. We're getting some sweeps. So we want to see there's going to be stops here. Write this down. You always have to look left. If you're looking here and you're not looking where the stops are, because the market will squeeze into stops, you need to put that down as in your trade plan. Look left. Where's the stops? Here, here, and here. So we don't know how far back it'll come, but we do know this is an outside edge of the distribution. So if we come out here, which is out in here, and clean everybody out, we then might set up something called mean reversion, which will come back here and maybe rotate. So let's watch that and see what might happen. Questions, guys, please post them. If you're in YouTube, please give a like. And I want to invite all of you to the Bookmap Discord TraderLab community. There is no cost. There's a link in the bottom of YouTube if you're inclined. It's a great community. It's for serious traders. It's not romper room. It's really about helping traders develop an understanding of the business they're in. It is not the magic indicator or the only one thing you need. If you've been out cruising around YouTube or on the internet or Instagram or any of that, if at this point you might know the difference between nonsense and reality. The reality of our business is there is no holy grail. It doesn't exist. And tuning and tweaking indicators is only going to get you tuned and tweaked to the past. It doesn't really have anything to do with what's going to happen in the future. Also, indicators all work at times. We all have winning trades with them. I found for me that was the big fallacy of indicators, because everything works. If remember, if you took it to the other extreme and you used nothing, not even a dartboard, you just closed your eyes and push buy or sell randomly, you'd still have winning trades. That should give you a hint about winning trades, just like gamblers have winning hands. But over time, the casinos extract the dollars from gamblers, even though they do pay the gamblers. So the gamblers, just like traders who have no edge, think if they work on improving it, their randomness, that now they get edge. They don't have edge. They just have randomness in a random environment. That's your experience. Don't be too surprised. Outside edge is here. First hour is low. Stops are going to be here. And this is our outside edge. So for me, I'm not a recommendation. I'm looking for a continuation short in here or up here. And if it doesn't get to the location, I just hang out and wait. There's always another bus. This is tricky right here because you've got stops are going to be sitting above. This is a iceberg, by the way, that's just bracketing. You see this thing running around here? It's like, what are you doing here? So it jumps up and down and around, and it's got to be, looks like it's not over here. High volume structure. Now, this is a potential short. I would not take that, okay? Because because of this. What I would like to see, for me, not for you, is a pop and then a short. This is an IB continuation trade. It's a structured trade. I wouldn't take it. And again, I don't call trades. I'm just telling you some reasons why. Stops are here. So if we come up in here and I see exhaustion in a sweep, then I'd be inclined to sell it. So this is not my trade. The idea of this whole business is to know where your trade is going to potentially show up and know what you're going to do if it happens. If it doesn't happen, your job is just to sit back and be a tourist and wait for the next bus. That is what being a professional career trader is about, not a video gamer, you know. How we doing? This is a trigger and the test and the high volume. Right here is where the trigger fired. This is the test. The stop would go here. But again, it's not a trade I would take. It's a trade you can take. It's the IB continuation trade. When the market comes back to a location with stops, I just wait for me, a better trade. I don't matter to me. I think what happens, I've been trading 45 years, and at some point, it's really a matter of discretion in the sense of probabilities and the best trades. The fact the trade works, remember, we're in a random environment. So this is not my trade. It could be yours. Doesn't matter. This is a Trader Lab trade. So I just have specific rules that I follow in my trade plan. I try to manage compulsion because we all feel it. Because this is a trade, but for me, it's out here is really where I was more interested in it. Yeah, it's a nice trigger. And the idea of this one, now remember where the buyers were. They were right at this high volume. So we want to see what happens here. And of course, you got, the low of the day. But this was where these buyers took control. So the idea is if buyers absorbed here, then we want to see the behavior if we return. Now, let's remember, this is not a market to be a buyer, in my opinion. And I'm going to always have to say it's not a recommendation, but kind of on the side, I'm going to say, give it some thought. So buyers are here. Buyers were here, right here. We have a sell sweep, potential for counter rotation. Trend is down, so no longs for me. You guys have to do your own thing. You're taking longs today and getting stopped. I'm going to suggest you put the car back in the garage and give it some thought. unless you have an edge. This is all about business of edge. So in a liquidating market where the market is absolutely jumping out the window from the top floor, do you want to buy it when everybody else is selling it? That's one of the ways to think about it. And why does the market go up? Well, shorts, you see these buy stops coming out? Buy stops, buy stops, buy stops, buy stops. That's the shorts. Now what? If I get structure and I come up to, location, and it's in your plan, knowing, and you get a trigger, this, you can sell it. And yes, you'll take a stop if it squeezes higher. I will say that for me, and in the stream here, it's very much about discipline and structured trades. But if you can read it, if you put any trade on, you got to know where your entry is, which is right here, and your stop is 3 ticks above this. So if that fits against here, it's about a 3-point risk. You could put this thing on and off you go and manage it. Or if it doesn't fit, you don't take the trade and you wait for the next bus. If you're doing anything other than that, then you're a gambler. Let's look at this. I come up here, chop, 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 break high, so no trigger. Here, chop, 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 break low, trigger. Test. Location, you see? That's the difference. And then, Now here, we have a sweep. Let's look at this microstructure. We'll just take a look at this. Chop, chop, break high. What's too high? Over here. Break low, trigger, test, see you later. Here, chop, chop, break low, test. I'm not paying that. Get out of here. Leave the store. Chop, chop, break low. I'm not paying that. Resistance. Who knows? Chop, chop, break low. I'm not paying that. Chop, chop, break high. Uh-oh, too low. What was the last too high? Right there. Resistance. See it here? Resistance. Because my sellers are there. That's my last area where the sellers were still in control, absorbed. Buyers take control. This is a trade management opportunity. Now, the problem, of course, is how do you manage your trade? Do you exit here and that's it? Well, let's see. You all right with that? Are you going to throw your spaghetti against the wall? Or are you going to go, yeah, I'm good with that? And then what? Sweep. Then what? Where's the outside edge? It's out here. Now, you don't need, in my opinion, to do anything else with this. But this now is rotational outside back to here and potentially to come out the bottom. Or not. This sets up the potential short. You have a sweep. This is a continuation trade. And this is outside and you'd be coming here. This is called mean reversion and we are trading in fractals. So in the Trader Lab, what this is about is understanding how the market works, why it rotates. And it rotates because that's part of the auction. The other part of it is that stops are always in the market behind the rotations. So the market can very easily counter-rotate to take these guys out that are the weak hands, which is us. Retail traders are not the strong. Believe me, we're not the strong guys. We're the minnows. Too high. See? Too low. Buyers, too high. No clue. Sweep. Outside edge. Location. Too high. Now, you may not have a trade here. You don't do anything. You're done with your trade, and then you're just sitting out. And then if you never take another trade for the day and you took structured trades, you would have a great day already. So that's what I kind of think is the idea, Um, I'm getting a question in YouTube. Heavy levels of puts or calls. Well, yeah, the market is very much option driven, but that doesn't mean anything in the scheme of what the participants are saying about value. So, um, over the years, I've certainly worked with just about everything that's come down the pipe, but I don't use them. I just look at this because I'm trading in rotations. I found that levels, doesn't matter what they are, Fibonacci, any of this stuff, whether it's option based or rotational based. I found for me that anything I add can create conflict. So for me, what I do is I don't participate or put any other inputs. I'm a minimalist, so I just use the auction. So I don't look at that. But if it works, everything is random. So I mean, so many things I did over the years, worked at times. So I keep them on my chart. Maybe it would be supportive, but it just added more conflict. But I'm only talking about me, So I kind of ended up going the other way. For me, it was like run to one side of the boat, put everything but the kitchen sink on there in order to create certainty and confidence in what you think you're doing. Or the other side of the boat is tear it all out so that your decision process is conditionally based, and then a minimum amount of inputs or conditions are required in order to interact with the participants. So that's kind of where I ended up. And that was after doing years of all this other stuff. Here, this is downside rotation. This doesn't say anything to me. Let's watch. This is a chop. And if you notice, what we're doing is we are now consolidating. And when you have a consolidation, it can break in either direction. There's sellers up here. There's buyers down here. We had a sweep, which suggests counter rotation. And we have a sweep here, counter rotation. This one does not say anything at the moment. It's not at the right location. You notice how sell sweep upside. Well, when you get a sell sweep up here, it's not as material to me as a buy sweep would be, which gives you that. That's nice. So it's not material in what I do. So I just look at it and go, that's nice. Oh, outside edge is up here also. So this is the consolidation that we're talking about. So outside edge. So this is what you're trying to do with this thing. This outside edge at 52.25, this is the outside of a consolidation. This sets up a potential short against this, but the target is the high volume. So it's very tight range. You could operate in this, but you've got to, if you get outside, and by the time you execute, you're not getting short here. You're probably going to be getting short in here, 49, 45, and then out the bottom, or rotate back to the high volume. So this is what's called mean reversion. It is a structured trade in Trader Lab. Again, it is a bit advanced because of the velocity and the speed of these rotations. So you really have got to have unconscious competence to be trading this. Otherwise, you should not be in this. Yeah, you're welcome. I'm seeing a question on how do you clean up Bookmap. Map Lite is, kind of like the ultimate gift of the century. Besides a high tier order flow tool like Bookmap, here's what the front month looks like. You see this? That's a bracketing algo. Okay, with Map Lite, it filters it out. I mean, and this is included in this. I mean, so you see the difference? Those bracketing algos are gone. I want to see the liquidity that's material. So Map Lite has a built-in filter, and you could adjust that. And there's also Map Pro, where you can get in there if you one of those guys or gals who likes to get a screwdriver out and do a little tweaking and tuning, to filter and just see what you want to see. But TraderMap Lite is already set for ESNQ, I think YM, RTY. So you just check a little box and off it goes. How we doing? How about a like in YouTube? Hope you like this. I guess, the thing about today is there is no secret in trading. I think it's all there. What our problem is our FOMO and looking for easy, plug and play, and now you have an ATM in the basement. That's a great fantasy, but let's get real about this. It's not the way the business works. So, if you're inclined, use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. There's no cost for this. Plus, there's a lot of additional education at no cost. Stocks, options, large cap, small cap stocks, options, crypto, order flow, with a high tier tool like Bookmap, algorithmic behavior, market maker behavior, and a lot more. And it's all available to you guys. You do need, if you use the link in the bottom of YouTube, you can join the Bookmap Discord Trader Lab community. There's no cost. The Trader Lab, there's a library of webinars. There's a document section on statistics that we do use quite heavily, and you have to vet everything for yourself. The library of webinars goes back quite a bit, and there's a lot of my streams in there, some of them up to 5 hours long of real-time narration. Today, what's interesting about today is certain days have less trades but more range. Today, in my opinion, is one of those. You don't need a lot of trades. You need trades that have an edge, and you need discipline to wait for your trades, and you need the psychological ability to understand you're in business and that you're going to take stops. If you can't accept taking a stop, it's not right or wrong, and it's not approval. It is probabilities and random distributions of outcomes, gaming. So if you're still struggling with confidence and the sense of predictability and certainty, you're not going to achieve it, in my opinion, in this business. What you are going to achieve in this business is randomness. So how do you operate in an environment that's 100% random? Ever think about it? It's not about trying to be right. It's about accepting that being right is operating with a vetted, structured trade plan and accepting the random distributions of outcomes. Outside edge. Let's see what it does here. Consolidation. Chop, 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 chop. We have our high volume is there, and it's actually here. 56.50. Let me just check a couple of things here. Okay. So this is a high volume node. This is sort of your, and if it was down here, now the trend's down, right? So for me, it's only shorts, not a recommendation. And when you're looking out here, now this is very micro and advanced, okay? So I don't want you guys to think this is something that anybody ought to be doing. This is very micro and very advanced. You can learn this in Trader Lab, but this is not something that you would necessarily trade. In Trader Lab, the idea is that you learn to think differently. Now, I don't use any indicators. So what I had to do was learn a language. Why did the market come here? Because this microstructure was too high. I rejected it. Why did I come back here? You're asking. To test the structure, which was too high. Right there. You see it? Where did we come? Here. What does that suggest? Rotation. Now, again, these aren't necessarily trades that one should take. However, it is structure. So if you can read the market, because you can speak a foreign language, as you develop as a trader, it becomes nuanced and more micro. So it requires timely execution with no certainty, because it doesn't exist no matter what you're doing in this business. So if you get proficient, and this does not come in 3 months, this is a structure here, and this is your support. Notice the microstructure here. High volume is there. That's support. Why? Buyers are here. What happened here? Buyers are here. Microstructure. I'm just going to put a little line on here so you can see it. And what happened up here? Let's come back. Microstructure. There. I'm going to put a couple of these on here. Hope I got that in the right. No, it's this one, actually. Wrong place. So the thing about trading rotations is that it's really support and resistance. Support, resistance. Where's the stops? Here. So if this might be too high, this, and this is our outside edge, the market can do this. Stops are going to be sitting here. So if you're putting trades on, you might want to consider what's too high, what's too low. And you could actually operate in this if that's your thing. It's not my thing. I mean, let's put it this way. There's structured traders who are developing. It's not a place to trade. It's a place to anticipate behavior. You can learn this in Trader Lab, but this is not a 6-week endeavor and then now, you've got a business. This is about stepping back, taking all the experience you've had and getting a yield from it versus waking up trying to fix a process that might not be in alignment with the actual business you're trying to be in. Have you ever thought about maybe what you're doing is you're trying to create certainty in an environment where it doesn't exist? I call that Trader Groundhog Day. I did a webinar on it, and you guys are welcome to visit the Bookmap Discord Trader Lab community. Use the link in the bottom of YouTube. This library of webinars talks about why traders who use indicators fail. Trader Groundhog Day, when you work hard, tweak, tune, curve fit, looks good, and you have random winners or even sequences of winners, but overall, you're losing. Why? Because you don't have an edge, but you do have winning trades. I think that's one of the worst things that happens to us. We all have winning trades. So we just think it's make it better. Here's the catch-22. Maybe it has nothing to do with the random distribution of winning trades. It has to do with not having an edge. Because gamblers win at the casinos, and the casinos pay the gamblers, but over time the casinos extract dollars from the gamblers because they have an edge. They don't play games that don't have an edge, but as retail traders, we do, because we see random distribution of winning. If we can accept we're in a 100% random environment, then we're not trying to be right. What we're trying to do is only interact with the other side when we have an edge and then sit out. Hope you got something out of this. Remember, these streams will be available in YouTube if you want to review them. I am in Costa Rica, so I'm going to try to tweak things a little bit. But you might want to be checking in YouTube for the stream. As long as I'm in Costa Rica, I might not be able to stream at the same time in Discord, subject to bandwidth and which way the monkeys are swinging on the vine. Please give a like. Thanks so much for visiting Bookmap Discord. If you did, and be sure to use the link in the bottom of YouTube. Give a like on the way out. Thanks for visiting the Trader Lab, and I look forward to seeing you guys tomorrow, subject to monkeydom. And don't forget to give a like on the way out and support this stream. Appreciate you visiting Trader Lab today, guys.